Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastep Jr.
Hello and welcome back to the Ask Ralph Show. I am very happy that you joined us. My name is Ralph Eastep Jr. I'm an accountant in Middletown, Delaware, and I do this show every week to give people information. And I asked on my Facebook site today for somebody to give me an idea about some show topics. So I have one here that was given to me by a friend of Facebook. Her name is Rachel. So Rachel, I want to thank you for this question. And the question is this: how do you distinguish between a business and a hobby? Which is a great question. And it's a question I do get in my practice quite a bit. If you want more information about my practice, you can reach me at askralph.com. That's ASKRALPH.com. You can go to our website. You can download our podcast at the Ask Ralph Show. You can get those on iTunes or on the Google Play Store, wherever else you get those. But let's answer the question today. And I'm going to go right to the IRS website. And there was a page that they updated on the 13th of December, 2018. And believe it or not, they asked the question: how do you distinguish between a business and a hobby? So let's talk about this. You know, in making the distinction between a hobby or a business activity, you have to take into account all facts and circumstances with respect to the activity. Now, here's the big picture issue. A hobby activity is done mainly for recreation or pleasure. It doesn't mean there's any one particular factor that will make this decision, but they've provided us with some factors that they use if they're going to look at this. And why is this important? So let's back up there and talk about that first. So the reason this is important is the IRS will not allow you to take losses on a hobby. So for example, let's say that you have a hobby of photography. So you come in to get your taxes done and you say, Ralph, okay, listen, I've got this photography hobby. And I didn't sell many pictures. In fact, I sold one picture this year for $100. But Ralph, I've got all this equipment that I bought. I'm paying subscriptions for these websites. You know, I do all this travel. I do all this advertising because I'm really trying to break into the business. Now, so let's think about that. So what the IRS basically says is that in that circumstance, you have to determine whether this is a business or a hobby. If it's a hobby, they're not going to let you take a loss against your other income. So let's say you have that photography business and you brought $100 in, but you spent $6,000. So you basically have a $5,900 loss. If this is a hobby, that loss is of no value to you. Now you can write off the $100, that income to make it a zero, but you can't drive it negative. Now, if it's a business, then all of a sudden we have this loss. So what can we do? What are the factors we can use to determine this? And they list up 9 of them here. So let's talk about these. Whether you carry on the activity in a business-like manner and maintain complete and accurate books and records. This is an easy one, folks. If you're in business, act like you're in business. Maintain complete books and records. If you don't, that's a sure sign that this is a hobby. Number 2, whether the time and effort you put into the activity indicate you intend to make a profit. Again, what they call the for-profit motive. Are you really working to make a profit? If you spend 5 minutes a week doing this, well, guess what? It's probably not. But if you spend every waking hour of your day when you're not working your regular 9-to-5 job, well, that probably is a business. Another one is whether you depend on income from the activity for your livelihood. Now, this one you have to be a little careful with. It's like I tend to disagree with the IRS on this one because as you're breaking into a new business, you might not be depending on that for your livelihood, but the thought process is that eventually you will. Next thing, whether your losses are due to circumstances beyond your control or are they normal in the startup phase of your type of business. So the IRS is going to give you some grace here. If you're starting a new business, they're going to assume you may have losses the first 2 years. A rule of thumb is you need to show a profit 2 out of 5 years. Now, that's assuming you're doing it as a sole proprietorship. I don't want to lose you in the details on a Schedule C. You know, if you're setting up an LLC or corporation, I think there's a little bit more of a belief that you have a for-profit and business-like motive. Another thing they're going to ask you about, whether you change your methods of operation in an attempt to improve profitability. Again, this goes back to a discussion of, are you in this to make money? If you're in it to make money and you're not making money, what are you doing to try to change that dynamic? What are you doing differently? Are you looking at new options? Are you looking at ways to advertise? Are you investing more of your time in the business? If it just continues to be a loss and you're not doing anything to improve it, well, maybe you're just a terrible business person. But I think at some point the IRS is going to say, wait a second, this looks more like a hobby. Another one, whether you or your advisors have the knowledge needed to carry on the activity as a successful business. Again, we're talking about motive. What is your motive in this? So I'm an accountant. I'm a master's degree in accounting. That's what I do. Well, if I decided tomorrow that I was going to run a veterinary clinic, as an example, and I have clients that do that, well, obviously, I don't have the knowledge needed to carry on that activity as a successful business person. So the IRS might look at that and say, wait a minute. Yeah, that's great. You want to be a veterinarian, but you don't have the license. You don't have the skills. And maybe that's a terrible example, but that's what they're looking at. Do you have the knowledge, or are you willing to hire people with the knowledge to make it work? Great example of that. Let's say you go by a dollar store and you have no idea how to run a retail dollar store. That doesn't mean it's not for business, but you better make sure you're hiring people to help you. Another one, whether you were successful in making a profit in similar activities in the past. Again, they want to know, what is your skill set? What do you know how to do? If you are an entrepreneur and you ran business A and it took off, and then you say, well, you know what? I'm getting kind of bored with that. I'm going to move on to business B. They're going to use that to your benefit. Another thing they're going to ask, whether the activity makes a profit in some years and how much profit it makes. Again, that's that 2 out of 5 thing. So a lot of times I'll have a client come in and they'll say, Ralph, I lost money again this year. I lost money again. And this happens with realtors, believe it or not. And the state of Delaware has gotten really kind of cracked down on this. There's a lot of people that are real estate agents part-time, and they're not really putting in, all of the effort necessary to be a successful real estate agent. And what the IRS and more likely the Division of Revenue in Delaware has said is, wait a second, you can't just say, hey, I'm a realtor. I'm going to write off all these fees. I'm going to write off my desk fees. I'm going to write off my MLS and all that sort of thing. And, your super key and all those type of things if you don't have a motive to actually sell houses. And the last one they've got here, whether you can expect to make a future profit from the appreciation of the assets used in the activity. And that's a fancy way of saying, if you have purchased a bunch of equipment. So let's say you decided today you're going to start a gym so that people can get healthy. And, you start this right at the beginning of the year and everybody was like, oh, gung-ho, it's the beginning of the year. I'm going to lose weight, but, it costs money to get that set up. So the question the IRS would ask is, yeah, you may have losses at the beginning because you're building that gym. You've got to build that membership list. So the question is, if you buy, 20, I guess they're called Nautilus machines and, 12 treadmills and 5 ellipticals and all that sort of thing, is there an expectation that the business will make a profit by using those assets in the future? So I hope this was helpful talking about between a business and a hobby. And I get, the big deal here is, if it's a hobby, you cannot take a loss on it on your tax return. If it's a business, you can. But you need to talk to somebody like me to help you through this process to make sure you don't get jammed up with the IRS.
You've been listening to Ask Ralph, brought to you by Sazio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Sagio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.